To the upside. About an hour to go now, exactly till the trading day opens. Tim and Yuri still with us to talk about what they are looking ahead to in today's trading. So, Tim, you would think light volume heading into the week, and I know although that's kind of the easy answer, it's a holiday week and everything else, but what type of business needs to be taken care of, do you think, by managers and the rest of it before the year ends?
Hedge funds need to unwind their positions if they have impending withdrawals. So they're notified of their withdrawals on November 15th. They have till year end to come up with the cash. So they're unwinding positions. At the same time, the rest of investors want to make sure they're adequately positioned for 2010, and that might involve a different strategy than 2009. Right. Plus, a lot of people missed the first rebound of the market, so they need to start putting money to work.
Right, that's the interesting. I mean, everybody's got their own angle on it. Tim brings up a good point, Yuri, that different investors would have different agendas. What's yours, by the way, Yuri, heading into this final couple weeks of the year?
Well, to your question, your earlier question, I think there's so much money on the sidelines from a retail perspective, and over Christmas, people are going to be sitting at home looking at the recent stock prices that have risen over the last 2 quarters and are going to think, hey, I need to get back into the market in the first quarter of 2010. So you're going to see some buying even as the hedge funds are unwinding, as Tim mentioned, and repositioning for different strategies. My strategy is to remain diversified as much as possible internationally, with more than 60% of my portfolio in those areas, and have some sort of hedge. I have about 4% of my portfolio in commodities, the majority of which is gold, which I think will be resilient in 2010.
Yeah, you were mentioning that earlier, Brazil and other countries. Tim, I'll let you get the last word on this market conversation. Yuri has a lot of faith in what's happening outside of the United States and investing there. A lot of these markets, of course, run up a lot already. What's your view on investing outside the U.S., Tim?
I think the most profitable way to do it at this point is to buy U.S.-based multinationals that benefit from the weaker dollar. They have foreign units that they can repatriate cash from at a very favorable exchange rate, and not all of them have run up as much as the market. So you actually have some good entry points here for some multinationals that can benefit from the growth outside the United States. They all report to the SEC and are audited. So I think these are cleaner numbers, and this is a great way to get global exposure with still some safety of buying U.S. companies with the dollar. Obviously, all of us are investing with our own dollars, and when we sell a stock, we want dollars in return.
Yes, let me ask Yuri about that then before we wrap it up, because Tim brings up the point, in his view, it's easier or safer to invest in U.S. companies that are doing a lot of business overseas. I gather from what you said earlier, Yuri, you're investing directly in many of these markets. Why?
I just feel like some of the U.S. company, firstly, just to backtrack on that, a good portion of my international exposure is multinational companies doing business abroad. I do feel like that's a good, a good way to get exposure in international markets. Having said that, some of the companies that are really into significantly into the markets, you can't get access to them through our multinationals that just are not in those types of businesses, in the local businesses in those markets. So you want to look at other stock markets outside the United States for potential investing. Yeah.
Okay, so you said that Brazil and others that you liked earlier in the emerging markets. Yuri and Tim, thank you to both of you for all the time this morning. Really appreciate you coming on. So Yuri Mann with us, financial analyst, and Tim Call from Capital Management has been with us all morning long. All right, we're coming up on 25 minutes before the top of the hour here at foxbusiness.com. Markets have been looking fairly strong all morning long, leading to the possibility that it will get a higher open on Wall Street. Of course, we're less than an hour away until that market opens, and we'll be covering it throughout the day on Fox Business, leading up to the half-day Thursday and the day off Friday, of course, for the Christmas holiday. Shibani Joshi's covering the early market action at Times Square at the NASDAQ market. And Shibani joins us now with a preview. Good morning.
Good morning, Connell. Off to a higher open today on the short